Hello and welcome to the Weekly Outlook at XM.com. I'm Maria Pasha-Radius, and joining me is lead investment analyst Rafi Boyadjian. We'll be reviewing the week ahead. So Rafi, let's begin over in the US, where we'll get CPI figures on Wednesday and a flurry of data, including retail sales, on Friday. So far, the Fed has maintained an ultra-dovish stance. Do you think that stronger than expected data will put more pressure on the Fed to re-examine its stance? And how might strong data affect the dollar and treasury yields?
Well, Maria, we haven't seen a huge reaction to economic data lately out of the US because basically much of the good news is already priced in. So we still have that central narrative that all the stimulus and the vaccinations which are gathering pace around the world will almost certainly lead the world out of the pandemic whole, and we're going to see a full recovery, at least in the major advanced economies. And although we've had some negative headlines, some setbacks, whether it's the vaccines or fresh outbreaks of the virus in some parts of the world, overall, we haven't seen the risk appetite take a huge hit. On the other hand, neither has good news been leading to a huge reaction. That's because much of that seems to be already baked in. And of course, we have the Fed assurances that they're nowhere near in starting to think about withdrawing some of the stimulus. And markets are now convinced that the Fed will not be acting anytime soon. However, we do have ongoing inflation fears. And so something could easily spark off another panic selling in board markets, which would push up treasury yields and in turn the US dollar, and that response might well come from next week's inflation data. We're expecting to see annual CPI rate in the US rise to 3.6%. The core rate is expected to rise much more moderately, but the bigger than expected rise in the headline figure could potentially lead to a jump in treasury yields. Well, the retail sales, on the other hand, we are expecting some moderation after that 10% boost we saw back in March on the back of that third round of stimulus checks. But we're also going to have other data, industrial production, consumer sentiment surveys. So if all of that are much stronger than expected, that could perhaps help the dollar to push outwards, because although the dollar slide has steadied, the dollar is struggling to make much further gains. So if there's not a huge reaction, we could see further consolidation in the dollar. On the other hand, if the data is much more upbeat, then potentially that could help the dollar extend its modest rebound.
Right, okay. Moving over to Europe now, there's not much on the European agenda next week that could impact the euro, but perhaps we'll see a reaction once the ECB's minutes come out on Friday. What should we expect?
So as you said, the data, we don't have anything too significant, so the focus will really be on the ECB's meeting minutes. So back in April, we did see the ECB push back on the idea that they would be tapering sooner rather than later. On the other hand, we didn't see as much of a strong commitment on keeping yields low as we had seen earlier from the ECB. So hopefully the minutes will shed more light on where policymakers actually stand on tapering, on to what extent they're willing to intervene in the bond markets to keep yields down. So the euro will probably be sensitive to any views that are somewhat more dovish or somewhat less dovish than what we've heard already. On the whole, though, there shouldn't be nothing too dramatic coming out of the minutes. So perhaps you could see the euro consolidate further against the US dollar. The euro had a very strong April. We've seen that rebound, that uptrend lose steam at the start of May. So if we don't get any clear signals next week on policy direction, it's hard to see the euro resuming its uptrend in the very near term.
And finally, the Bank of England just announced that it will reduce its weekly QE purchases, which didn't move the pound much. We'll get the GDP growth figure for the first quarter on Wednesday. More importantly, we'll get the results of the Scottish election over the weekend. How might the pound be affected if there are strong gains by the Scottish National Party?
So referring to the GDP data first, so that's probably not going to get a huge reaction. That's mainly seen as old news now. We know that the UK was in tight lockdown in the first quarter. So GDP is expected to have contracted over the period. Of course, nothing on the scale that we saw in the second quarter of last year. And we're also going to have separate numbers for March. Now, these could be a bit more upbeat than for the whole quarter because we did see some loosening of restrictions back in March. But overall, of course, if we see any big surprises, we could see a significant reaction in the pound. On the whole, though, much of the focus will be on those Scottish elections, as you mentioned. So the Scottish National Party could they've got a good chance of winning a majority in the Scottish Parliament. If not, then they might be able to form a majority with another pro-independence party. And if that happens, that would put the another Scottish independence referendum back on the table. Now, the question is, will the pound react just yet? Because it might be too soon to start overreacting, to start fearing Scottish independence just yet, because we have seen some waning support for Scottish independence in recent polls. So just as we saw with the Bank of England decision, we didn't see a huge reaction in the pound. The same thing might happen on Monday. On the other hand, we should be wary of any volatility on Monday morning in case of any shocks in those election results.
Rafi, thanks so much. And thanks for joining us at XM.com.